Hey everybody, Chuck Barone here. Welcome to the show for November the 4th, 2022. It's Friday. Yeah, baby, I'm ready for this weekend. As always, we want to start the show by thanking all of you guys for watching the videos, for your likes and shares, comments, questions, great questions, especially some of the ones I've been getting on my Ask Chuck Barone. I'll be on it, finishing all those up today. So if you guys have sent a question in the last week or a few days and I haven't gotten to you, I'll be cleaning them all up today. In the markets today, it's the end of a week. It was a dramatic week with Powell. I think that the parsing of what Powell said kind of really made the market have a sad yesterday. Today, they come with the employment numbers that were so important. Everybody was waiting to see what those were going to look like. The market interpreting those numbers as favorable for the Fed, maybe loosening up a little bit. So the market rallies, stocks up today across the board. A happy finish to the week. I was glad to see it. I think I'm still pretty bearish about these rates. I don't think they're going to let up on them. The market's looking for a reason to run. There's a lot of loose cash around still, guys, and that money wants to get to work. The markets are looking for a reason to rally, I think, but I don't really think that the actions of the Fed, maybe with all the parsing of the words and as they parade their people out there nonstop, that'll get the markets to go up and down and up and down. But I think bottom line is the Fed is determined to fight this inflation. They're going to follow through at least until something really breaks. If this is a nice way of treating a party before the midterms, I'd hate to see the bad way. But if it is, I think things will turn a little bit darker after the holidays. Usually the markets kind of take a little bit of a breather in December and don't want to pile up a whole bunch of bad news for the holidays. It's going to be an interesting start to next year. I can't wait to see what the tone looks like and where we're at toward the new year coming up. Crazy times. I'm sure they're going to continue on. Bond market today, kind of mixed market. Prices down today on the 10-year, rising up only 3 basis points, not a very big move, up to 4.15% yield. The interesting thing was the 2-year goes down 4 basis points, sitting at 4.66%, narrowing that spread out a little bit. That's kind of odd to me, how one has a good day, one doesn't. Bond markets don't usually work that way. The yields are on their way up, though. The trend is certainly up. We'll see how it works out. The bond market's in a pretty bad bear market right now. I think bond players, people holding bonds, are stuck because those bonds have significantly lower, yield and, payouts on them than the new bonds coming out, which are abundant. And I think that's causing some issues. We'll talk about that a little bit in the comments. The dollar today had a very negative day, down more than 2 points today on the index, down to 110.78. I think this is another reflex move of, the Fed's going to pivot, the Fed's going to ease up, the Fed's going to lighten up. We'll see if that actually comes through, but the dollar down on the rumors of the Fed slacking their interest rate. With the dollar coming down pretty well, metals and oil rally today. Metals had a really nice day. Gold up $52 an ounce, sitting at $1,683 per ounce. Silver rising at $1.39 per ounce. A nice move for silver, almost to $20.94 last I saw on Kitco's site. Nice move for metals. I know these markets have wanted a rally. I've been saying it, a few times on the show. I think metals were looking for a reason to rally. They found it today. We'll see how this continues on into next week, where the dollar goes. But I think there's still room for the upside for metals. Oil today also up pretty dramatically. 5% move in oil today, up 5%, $92.57 for a barrel of West Texas Intermediate. Natural gas continues its crazy roller coaster ride, up 8% today, $6.46 for their million BTU. These markets are wild, guys. Be very careful if you're in these markets. Bitcoin has a monster day today too, rallying really nicely, up $840 today, sitting at 21,090. It looks like Bitcoin's building up a bottom here, which is nice. Hopefully, this momentum can, for our Bitcoin investors out there, can continue to roll in the weeks moving forward. It seems like it's kind of been moving with the stock market. It had a couple of different days where the market was down and Bitcoin still was up. Let's see if they can get some separation, but this certainly was a day for Bitcoin investors to be happy about. The news you guys need to hear today, payrolls today. That was the big news, coming in at 261,000 new jobs versus 200,000 expected. I think that that was a jarring part of it, but as they dug into it a little bit, they found reasons to not like it. The unemployment rate climbs from 3.5 to 3.7%. So they're creating jobs and the unemployment rate's going up. That's interesting. I think that these numbers, as much as the market would like it to give the Fed a reason to take it easy, they're not going to. They want this job market to slow down. Adding jobs is not what they want, especially a number that's so much above what they expected, even above what ADP came out with earlier. So I think the market and employment's still strong. I don't really think it gives the Fed much reason to pause. The economy in some cases, except if you're not in real estate or interest rate sensitive businesses, you're probably still doing okay. We'll see where this all, this is just going to be an amazing ride we get to take. We're living history. They'll be writing about this stuff, talking about this era down the road, like we talk about the era with Paul Volcker and the inflation of the 70s and 80s. A time in history that's going to end up, being recorded as something significant. I think that times are changing back. It's back to the future, guys. Well, let me finish the show with that. Let me get to finishing the news stuff here, okay? Barone's magazine was reading that this morning. Now, they came out with a big article saying that the Fed is trying to force housing prices down. Mission accomplished, Fed, at least here in Vegas. Last I saw, median price down in Vegas under 340,000. The amount of listings multiplying pretty rapidly. The houses are staying on the market longer. Sellers, because they're hoping they can get old prices, still listing high, now reducing their prices pretty dramatically. Builders giving crazy incentives to get their inventory sold out. I just read another hedge fund came in and bought out a whole subdivision, 100 houses. Boom, we'll take them all. So the commercial real estate people are still around. But real estate, for the most part, is stinking it up. The prices are going to continue to come down. As I was telling you guys during a show, a week or so ago, even if we drop prices by $100,000, where rates are at today, if you're a first-time buyer coming in with 5% down, you're still looking at a payment of $2,700 and change. Not affordable for the vast majority of working people, my beloved schmuckatellis. So real estate's going to come down. It's just how fast is it going to happen? I kind of wish it would just hurry up and get it over with, but it doesn't seem like it wants to. Prices are kind of trickling down. And we have an odd thing going on here because you have people want to sell their houses because they have a lot of equity to gain out of them, but because of the dramatic difference in interest rates, when they realize what it's going to cost them to move into a new place, even if it's a smaller place, it's not a motivator. Let's just say that, because payments are so much higher than people are used to hearing. A simple mortgage payment, at today's prices, well over $3,000 a month, into the $3,400, $3,500 range. Even if we come down $100,000, you're still looking at $2,700 plus per month. So, what is the payment number that the average buyer, first-time buyers coming into this market, which is the lifeblood of that market? Without those first-time buyers, there's nobody to sell to, and hopefully we're not going to turn real estate into something that's just exchanged back and forth between big hedge funds and banks. So we'll see how all this turns out. I think that depending on how these elections go next week, there might be some legislation about real estate coming. Who the heck knows, though, guys? The times are the craziest I can remember. 2008, we all understood what was happening, and we had a pretty good idea of what was going to go down. This is so much different because there's so much mixed data. Hard to figure it all out. Anyway, to finish the show, just a real quick thing I want to mention, and so you guys are aware of it. As you know, and most of you have heard me preach to you endlessly about the things I think are important to be doing right now to protect yourself from what's happening and what's going to happen, and to be prepared for down the road when things brighten up a little bit. We've been preaching, save as much as you can. Try to at least save 10%. If you can save, more than that, great. If you can only save, $10 a month, save it. Save as much as you can. Whatever you're saving now, add to that. Make it higher. Put money away. It's going to pay off, man. We've been advocating, paying, not adding on any additional debt, right? If you can help it, don't add on any additional debt, especially credit card debt. We've been advocating paying down existing debt if you possibly can, even if it's an extra $10. It makes a difference. Just try to, get yourself in the habit of doing the right thing. We've been telling people to spend their money more thoughtfully, more judiciously. Try to ease up on the impulse stuff. I'm not saying don't buy what you need. Of course, you got to do that. Just be a little more cautious and thoughtful about the extras, the extra stuff. And if you can try to find a way to save it instead of spending it, it'll pay off for sure down the road for you. Because what we have here coming, guys, is a change again in an era. I lived through the last few of them, okay? So starting around the dot-com bubble bust, we moved into this era of super cheap, easy money, where Alan Greenspan lowered rates so much, he did not want a recession, that then they just kind of basically kept them there almost, it seems like, forever. We've been in a situation where getting big amounts of credit has just been easy. If you have a credit score, you're getting it. We've been in an era where borrowing money is inexpensive and the payments have been low. Well, for some of you people, especially the guys, younger than even 40 or 45 years old, who, came of age, so to speak, born in 1980 or later, I guess, you guys have only really been financially mature in this era of cheap and easy money. Well, it wasn't always like that. Money used to be much more expensive. I was showing Jordan in my office. Check out go and Google it up. It's real easy to find. The history of the prime lending rate from 1970 to today. And you'll see how long these eras last, because that money, tough money, expensive money era lasted almost 30 years. This easy money era, is 20 plus years. Well, these eras all come to an end and they kind of swing back and forth, and we are in that swing right now. So money's going to get more expensive. That's why I'm trying to tell you to save it. A lot of people believe the dollar's toast, the dollar's history. It's, there's so much, the narrative is pretty negative, right? But if those people are wrong, holding dollars is going to be a winner. I've been advocating all along to have 10 to 15% of your portfolio in metals. If you have that position dialed in, hold money, man. It's okay. Until you understand and you see a for sure reason not to. Well, I think that the interest rates they're paying right now are pretty nice. I think that interest rates on simple holdings, simple accounts, savings, and money markets are going to on the rise and going to continue to go up. So we'll see how it all ends out. If the doomsayers are right and the whole system's going to crack up and fracture and, we're going to something completely new, I really have to say I doubt that, but I would say a pretty big minority. But I've been around a long time, and I've heard a lot of these stories. The world has been coming to an end ever since I've been old enough to be aware of things. You know, there's always been the doom scenarios, this is it, this is the signs, look at the sign, look at the sign. And it just doesn't ever really happen. So we'll see if this time is the one. And I'm sure I'm going to get flamed pretty hard in comments, and I probably deserve it. But we're in an era that's changing. You're going to move to more expensive money. So the more money you have now, it's going to make a difference. Anyway, that's it for today, guys. Great week, great weekend coming up. Bills got the Jets. We're going to win again. And next week is a fascinating week. We got a lot of very important stuff coming up next week. We'll be here on Monday, wrap up every day like we do with the news you guys need to get to be successful in today's environment. Looking forward to tomorrow's. Have a great weekend, everybody. Spend some time with the people you love and care about, your friends and family. Until we see you on Monday, take care. Thanks.